Something that a lot of consumers don't know or have questions about or are scared of is leasing. So leasing can be pretty advantageous in certain circumstances, but some people are really scared of it because it means that you don't have a car at the end of whatever term, usually 3 years. So I'm going to go into pros and cons of leasing versus financing and why you might want to do it, and some information that you probably don't know about it as a normal consumer. So when you lease a car, you sign a contract that you don't own the vehicle, but the bank owns the vehicle, and you're basically renting it from them for a period of time with restrictions on the mileage and other things that you can do to the car. So you're required to do maintenance. You don't have to do it at the dealer, but you have to reasonably maintain the vehicle. And the only leases I've ever seen are actually Subaru leases, so some of this stuff may vary brand to brand, and it will vary tremendously state to state. There's different types of leasing in different states. So for example, at Subaru, a typical lease is going to be a 3-year lease with 12,000 mile a year cap. So you can get up to 36,000 miles at the end of your lease. And if you go over that, you're going to pay 15 cents per mile. And that will vary brand to brand for sure. You can prepay your mileage. You can do a 10 or a 15,000 mile a year lease as well. You can prepay them at 10 cents per mile if you do want to go over your 15,000 miles a year. That has to be done at the date of the contract. You have to pre-plan that. You can't do that at the end or somewhere in the middle. The lease company for Subaru is JP Morgan Chase, and so they're the ones that are going to own the car. They give you options to turn it in early if you want to, and all sorts of stuff like that. You do have to maintain full coverage insurance with a $500 deductible. Unlike with financing, typically you're allowed to do $1,000 deductibles, so your insurance can be more expensive, but most people opt to do $500 deductibles as well, even with financing. So one of the advantages to a lease is if you're trying to do tax write-offs. So if you want a continual tax write-off for a company, let's say, so if you're a business owner and you want to own it that way, I'm not a tax professional, just a disclaimer here. Don't take any of this as business advice or anything. Not responsible for that. But from my experience and what consumers have told me is leases allow you to write off the expense of the car continually over the period of 3 years, as opposed to a one-time purchase where you only get to write off the purchase price of the car for the 1 year. So for businesses, leases can make some sense. And then also, if you're really payment sensitive and you want a more expensive car, like I said in a previous video, go to a cheaper car. That's the best way to do it. But if you have to have something that you can't afford, leases are a good way to get into it. Like even Mercedes, I think Jaguar, they all advertise $200 a month leases, sometimes $300 depending on the month and what model and stuff. But you can get into a really, really nice car for a really low payment. So you're not going to be paying as much for a lease as a comparable finance. I have a lot of coworkers that ended up leasing STIs, $40,000 cars, and they're doing $400 a month payments on a car that should be, with the amount of cash down that they put towards that lease, like a $600, $700, $800 a month payment. So that's an advantage to the lease. Also, you can get away with doing less down on a lease. Some places will allow you to do zero down leases. Some places won't. It really depends on dealership and also how they want to kind of twist it. Don't want to get into too much of the legality behind that because I'm not an attorney either. But you can do zero down leases. Typically, they're going to want your registration and your first month's payment. But like I said, if you're planning on keeping the car, financing is the way to go. Now, if you know that you're going to want to get a new car in 3 years, if you're that type of person that wants to get a new car all the time, then leasing can make a lot of sense. You have lower payments, you have a car that's under warranty the entire time, you don't have to worry about, having an older car that's now 5 years old and outside of warranty or anything like that. So there are advantages to that as well. It really depends on on what you're looking for out of your purchase experience. So if you're really payment sensitive, if you want to do a low down payment, leases might be a good way to go. But for me personally, I have to finance. I drive too many miles. I've got 25,000 miles on a car that I've had for a year. So my lease would have been way more expensive, and that's something that you have to kind of factor in, is if you're going to do a lot of miles, a lease will really, really mess you up. Because if you do a 10,000 mile a year lease just because you want the payment to be really cheap, and you end up going over the mileage by, 10,000 miles, you're going to have to pay $1,500. If you go over it by 20,000 miles, you're going to have to pay $3,000 at the end of the lease, and that's due when you turn it in. Also, one thing that a lot of people don't know about leases is they don't have interest rates per se. They have money factors, which the rule of thumb is leases are going to be a little higher for an interest rate or a comparable interest rate than a finance loan on that car. So you are paying more interest, but it's on a lower amount because you're only going to be paying, let's say, 50% of the price of the vehicle. So residuals are going to be what the car is worth at the end of the lease, and you can buy it outright for that. So if you do want to keep your payments really low, you're going to keep the car, that's something that salespeople will always tell you is, oh, why don't you lease? It'll keep your payment lower, and you can just buy the car at the end of it. But you have to think, you're going to be paying more interest on that first part of your loan, and then you're also going to pay more interest on that second part of your loan, and you're paying it longer. Because now you're going to do a loan on a used car. If you do a 6-year loan after you already paid 3 years of the car for half of it, now you're paying just an exorbitant amount of interest. But I have coworkers that have done it, and they seem to be happy with it. So you can do whatever you want. My advice, get a car that you can afford to finance if you're planning on keeping it, if you're planning on doing a lot of miles. That's my advice, but you can take it or leave it. So that's just a quick overview of lease versus finance. Might go into a little bit more detail about leases. They're pretty complex, and there's an equation that you can use to calculate out what the payments are, and any fees that are in there. So yeah, thank you for watching. If you don't mind leaving a comment below for any ideas for future videos, and click subscribe if you do like the videos that are coming out, and the bell icon will give you notifications when my new videos come out. Thank you very much.